afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines we're tracking at this hour. Selling pressure intensifies in Indian markets as Nifty hovers around the mark of 10,650. Broader markets see sharper cuts. India's manufacturing activity clocks in its highest growth in the last 6 months. Tata Steel gives up early morning gains to trade nearly 1% lower as investors digest the terms of the JV with ThyssenKrupp. Anil Agarwal offers to buy out all other investors in Vedanta PLC.
Well, in terms of the markets, they have certainly come off days lows, with the benchmark indices now trading with about 0.5% cut. So we have seen a little bit of recovery coming on when it comes to the benchmarks. As you can see in the Nifty through the course of the day, off days highs, or rather off days lows, but still down by as much as 0.5%. And it is the same for the other benchmark indices as well. Let's take a look at some more variables in this market and see what else do we have in terms of the way we're seeing markets pan out in today's day of trade. So as you can see, that's the Nifty Bank. That's also looking at about a 0.5% cut, and it will be the same for the Sensex as well, more or less. Moving in, let's take a look at some of the key gainers and losers as well when it comes to the Nifty 50 and see where these gains are coming in, where these distractions. So in terms of contributors, because you can see it's Infosys, ICICI Bank and Asian Paints which are keeping the markets, well, to a certain extent arresting this fall. And on the losing end, substantial weakness coming in HDFC Bank and HDFC. So the HDFC twins bearing down on the markets, and it's the same for Reliance Industries and ITC. And as a matter of fact, 3 of these counters were the ones which led the Nifty higher, and it seems that we are looking at some profit taking in today's day of trade, which is why we're seeing so much weakness. In fact, down as much as 0.6% for now. Let's also take a look at how the broader markets are currently doing with respect to the mid-cap and the smaller markets. As you can see, the advanced decline ratio out here is, well, it's quite skewed towards the declines. In fact, in a ratio of nearly 1 advance for nearly 2 declines. So it's not looking like a very good picture, a complete reversal of the kind of moves and the cues that we saw last Friday. So we'll be watching out for that. That said, let's also take a look at some of the big movers and shakers in the mid-cap space. Let's start off with the gainers. Then we have Motilal Oswal. That's one of them, which is advancing by as much as nearly, well, I would say 6%. You also have Kitex Garments as well as GVK Power among the mid-cap gainers that are doing well in today's day of trade. And on the losing end, well, we do have a weakness in 8K Miles, which has now hit a lower circuit of 20%. So something certainly seems to be wrong with this company, considering it has seen so much strength. And then networks down as much as 0.8%, or rather 8% in general, and JSPL also down by as much as 7%. All these stocks at days lows. We'll be watching out for some of these cues for some of these mid caps as we move into trade today. But Navneet, what are we tracking with respect to the futures and options space?
Well, Agam, the picture is not looking that great. Where the day 1 of the July series was so good, we've given up 50% of the gains at least we saw, coming in Friday's session. But once again, the good news is that we've recovered from the day's low mark. Currently, Nifty is trading above the mark of 10,650, but that's still below the 50-day moving average. For Bank Nifty, that too slipped below the mark of 50 DMA, but I guess that's recovered from those levels. So currently, Bank Nifty is down almost 144 points in trade. The India Volatility Index had collapsed quite sharply on Friday, but I guess it's gone up in today's session, 3.5% higher, but it's off the day's high. At one point of time, India VIX was trading with gains of nearly 7% in trade. If you look at the futures, let's just pull up the Nifty Futures first and see what's happening there. No major open interest build-up, and the discount that's narrowed to almost 1 to 2 points compared to 19 to 20 points that was seen on Friday's close. But the picture is totally opposite if you look at Bank Nifty Futures. I think there's a lot of fresh shorts which are being building up, because if you look at the open interest, that's up nearly 13% in trade, and the futures, July futures, still continue to trade at least at a discount. In terms of options, what's happening in today's session, we've seen more of call riding, definitely, considering the markets are lower, but there's been some intraday unwinding that I've observed in the 10,700 call, but still currently that's added nearly 7 lakh shares. Also the 10,800 put strike That's added about 6.5 lakh shares as we speak. And on the put side, major addition so far has been seen for the 10,600. That's added nearly 3 lakh shares. And let's not forget the open interest on the 10,600 put on Friday went up quite sharply. I think it was up 30%. And this is the strike which is sitting with maximum open interest for the July series across both call as well as the put side. 3 stock futures I want to highlight. Adani Enterprises. In the morning, we highlighted that the Adani Group stocks will be in focus as the promoters are looking to raise some 6,000 crore via issuing securities or stake sale. And we had seen Adani Ports actually, there was a bull deal last week. But if you look at the stock today, it's down 8 to 9%. But in the last 4 trading session, the stock's down nearly 20% in trade. Not only that, it's touched its fresh 52-week low. And look at the open interest build up on the futures side. 9% lower for the underlying and 32% higher for open interest. That clearly tells you traders are taking fresh short bets in this counter. The metals pack is weak today, so Jindal Steel and Power has seen a very, very sharp correction. The volumes on the cash side, they appear to be on the higher side. The futures have seen open interest build up of nearly 13%. The underlying is down about 6%. One stock which has been doing well since Friday, and that's Idbi Bank. Watch out for this one. It's up for the second trading day. And the reason why it's been going up now, IRDAI has given its nod to LIC to increase the stake up to 51%. Obviously, in the next 6 years, they'll have to bring down the stake. But the fresh long positions, which was seen on Friday's session, Nagam, they continue in today's trade as well.
Well, there you have it. Some weakness starting to seep in once again after the tremendous strength that we've seen on the Nifty, last Friday. But that said, it is the first day of the week, so we will bring you a big global voice on the show. This afternoon, we are in conversation with Andrew Freris, and he's the Chief Executive Officer at Ecognosis Advisory. Hi, Andrew, and thanks for joining us. Let me just start by asking you about what you have made of the latest developments and the latest commentary coming from the United States with respect to the interest rate trajectory, as well as what you make of the economy at this point in time.
It's very straightforward, actually. There's very little to be made. The Fed started increasing interest rates in December year 16. So there is zero surprise, nothing to be commented on. Okay, the Fed has increased interest rates 6 times, and they're about to increase 2 more times. No surprises whatsoever. Very well communicated ahead in the market. The American economy is not doing too badly. In other words, overall, if I look both in terms of expectations, in terms of the inflation, which is now hovering around over the 2% that the Fed wanted to hover, and hence the increases in interest rates, the stock markets are definitely performing better than any single of the rest of the other stock markets. Then, of course, with higher interest rates, the US dollar remains quite strong, given, of course, that both the European Central Bank and the Bank of Japan are keeping interest rates down to 0. And in fact, they still continue to have a small range of interest at negative. No surprises that the US dollar is strong.
Hi, Andrew. Good afternoon to you from India. Does the flattening of the yield curve in US is a sign of worry that you're seeing? I heard in one of your recent interviews also that if you look at the yields on the 2-year Treasury and the 10-year Treasury, the gap is bridging there now.
Well, there is this obsession that if the yield curve looks as if it's going to invert, in other words, short-term interest rates are going to be higher than long-term interest rates, this is always the sign of a recession. Unfortunately, that depends completely on what is happening in the rest of the economy. And I'm afraid I don't know of any period in the American economy where you have an impending trade war. Incidentally, I'll come back to this because I think fears of a trade war are complete nonsense. But never mind, that's my view. Fears of an impending trade war were also associated with increases in short-term interest rates, and hence an inversion of the yield curve, not yet, but temporary, will be very much in the cards without this signifying that the economy is going to go into a recession. It is of concern, but I have never seen this actually justified. Inverted yield curve equals recession. Recession when? For how long? How soon? How long it lasts? Okay, it's all very, very easy to talk about this, but when it comes down to the details, as I say, the devil is in the details are missing.
Andrew, then do you think it's just a short-term impact that we're seeing on global markets because of trade wars? I can see the European market indices today have seen sharper cuts, and as per the latest news, EU has reportedly warned new tariffs worth $300 billion if US administration actually goes ahead and targets the automakers there.
Yeah, well, let's get these things right. The American trade war is a war on only 3 countries, count them, 3 countries, and that is China, Mexico, and Canada. The rest of the tariffs are tariffs on products. If you happen not to produce that particular product, you're not in war with the United States. And even if you are producing products, the range of amount of trade involved, it is so small as to make it ridiculous. Let me give you a very simple number. China has got a combined import and export trade of, take a deep breath please, 4,100 billion US. That is 4.1 trillion US. The amount of exports from China that are going to be impacted by American tariffs started at 50 billion and now there are 36 billion. That is, take a deep breath, 0.08% of total American trade, or not even 1% of total Chinese exports. Okay, it is peanuts. So the notion that if you slap tariffs on 0.000x% of someone else's trade is going to lead to a recession is so ridiculous as to not bear any justification. India exports to the United States 1.2 billion, I understand, steel products. Okay, the surplus of India with the United States is 30 billion. So it means that the exports that could be affected, it is 1/30th of 1% of the total surplus of India with the United States. All of it is nonsense. It is nonsense because it affects individual companies. Ah, yes, if I'm looking at companies, I will be telling you a completely different story, but not if I'm telling you something about countries. Philippines doesn't export steel or aluminum. It's not involved. Neither it exports cars. So does Singapore. Okay, so does Malaysia, so does Indonesia. Okay, the only thing that India exports, which could be affected, is steel products. End of story.
Point taken, Andrew. And some very, very valid points too out there that you made. That said, keeping in mind all of this then, you know, every now and then everyone hears this word of trade wars, the phrase coming through. There's just a little bit of volatility when it comes to equity markets around the world. Based on that, how are you assessing developed economies at this point in time? And what do you have to say when it comes to markets specifically in Europe and the US at this point in time?
Well, for economies that don't export anything which is involved in the American war trade, okay, in inverted commas, why should I worry about it? I have zero concern about this. For economies that do, then I will be concerned about the individual companies. It's not the same thing. It's like telling you, I'm concerned, I'm just giving you a stupid example. I'm concerned about BMW in Germany because it exports a lot of its cars to the United States. Incidentally, BMW in the United States exports practically everything it produces from United States overseas. And of course, now this is going to be countervail tariffed on, and of course they are terrified. Okay, but BMW is not the German economy. It is a tiny fraction of the German economy. So you know, this is really, really panic talking without sitting down and looking at the numbers. Look at the numbers, and you're going to find that the image and the picture is completely different. It is a serious problem for companies, but it is not a serious problem for countries.
Andrew, keeping in mind that the rates could once again be hiked by US Fed in the second half of the year as the guidance has been given, where do you put your bet on developed markets or emerging markets? And if you are choosing emerging markets, do also let us know what's the view in India then.
Well, the view in India contains 3 parts. I'll come directly to that. Indian interest rates started to increase. And of course, the last time India rates were increased was back in the year 16. So we had effectively 2 years of flat rates of 6%. So they've gone up to 6.25 concerns over inflation. Yeah, fair enough. India bond yields are fairly normal for this period of GDP growth, let's say, or the phase of the cycle. If the economy is growing at over 7%, I would be really surprised that in nominal terms, the bond yields were less than 7%, and in India they're not. They are all 7.2, 7.5, 7.9, concerning if I'm looking at 2 or 5 or at 10 years. So I don't see anything really scary. The second point is of course, that the stock market has been hit. But if I look at the Sensex in terms of Indian rupee, okay, it is up about 3.5% year to date. If I look at it in terms of US dollars, it's down by 3.5% in US dollars. Well, now, if I happen to be living in India and buying and selling in rupees in India, and if I had bought the Sensex at the beginning of the year, I would be about 3.5% up now. Well, it's not going to make me a multimillionaire, but it's nothing that it will make me too upset either. The third point, which I'm genuinely quite upset, is of course we're going to have elections next year. The Modi administration have lost completely their breath over any further let's call them reforms. We had the disaster of the rupee substitution. I don't know what they were thinking at the time when they did that. The goods and services tax was a good idea, but has absolutely nothing to do with macroeconomics. It has to do with the administration of the tax system in India, and the impact on that of trade, to the extent that I can see it or measure it, is going to be very little. And if you're telling me what else can I tell you about the Modi's administration in terms of modernizing and pushing forward the Indian economy, the answer is, I'm afraid, very, very little. Hence, I can't possibly get all excited about the next year and a half in terms of buying stocks and shares in the Indian economy. It's doing okay, but I reckon the reaction will be flat, or at least my reaction is flat, which is not the same thing as saying, I don't like what I see. What I'm telling you is if somebody tells me, why would you buy Indian economy, the Indian stock market, I will have very, very few reasons to think up.
All right. Well, some concerns coming in out there from at least from your foreign institutions. Andrew, Freris, thank you so much for joining us this afternoon and giving us your views on the U.S. markets as well as India specifically in this case. We will be tracking more developments here, but let's shift focus to a specific stock. This time we're going to talk to Godrej Agrobets, where in the current session it really isn't doing too much. But we've spoken to the management about its outlook and what plans it has in store. And we're in conversation with the Managing Director, Balram Singh Yadav, and we also have Sumeet Sarkar from our research team to help us steer through this conversation. With that, Sumeet, it's over to you.
Thank you, Agam. So, Mr. Yadav, Godrej Agrobet operates in 5 business different segments, but animal feed contributes the most to the top line. So, what is the kind of volume growth that we can expect from this segment going forward?
So, animal feed is the biggest in terms of top line salience. But our most profitable businesses are agrochemicals and oil palm plantation. In animal feed, last year we registered a growth of 7.4% in volume, and we are expecting upwards of 15% growth in this year.
And what will be the major growth drivers for this double-digit volume growth going forward?
So the main driver for the growth is very good volumes in cattle feed, coupled with very good growth in layer as well as fish segment also. One important point I wish to make is that in last few years we were having degrowth in broiler segment, which has reversed, and we are having decent growth in the broiler feed segment also.
So raw material prices of these feeds have been on an uptrend. So what is the kind of margin impact that we'll see on this?
So margin impact not likely to happen in this quarter, but maybe middle of next quarter margin impact might come. That's point number one. Point number two is that we have very good positions as far as raw material is concerned. Third point is that we expect that there will be 100% pass through of increased cost, because commodity prices will go up for everybody. I do not see a great impact for the whole year, but maybe a few months here and there you might see some kind of a dip in margins.
On the palm oil business, what is the current duty differential between the crude palm oil and the refined palm oil?
I think the differential is close to about 10%, but we are producing only crude palm oil and palm kernel oil, so we are not really concerned about duty on refined oils.
And what is the kind of growth that you're expecting from the crude palm oil segment?
Crude palm oil demand will always be there. India is such a huge importer of CPO, so we will always be having very good demand because we are in the business of import substitution in a very small way. Considering that almost 12 million tons of crude palm oil will be imported, we will be producing about 100,000 tons. So it is not a big deal selling 100,000 tons in such a huge market.
So has there been an upsurge in demand post the government increased the import duty on crude palm oil?
Not an upsurge in demand, but I think the farmers are very happy because farmers are paid as per a formula which depends on the oil price, and oil price is high, close to about 64,000 rupees a ton ex factory, just because of the 45% duty which is there.
With 3 consecutive years of good monsoon, what is the kind of growth outlook from the crop protection business of yours?
The crop protection business, we have maintained a growth of about 16-17% top line as well as bottom line. We believe that growth will continue, considering that this is the third good monsoon or predicted to be good monsoon. I am very sure that entire agri sector will do well. One of the things we must also realize is that farmer uses inputs irrespective of crop prices, because the penalty for not using good inputs is very high. So we expect that all agri input companies will do well in this year.
So the dairy business of yours has been a laggard on your financials in the past. So how do you plan to improve this segment?
So it is a profitable business. We never lost money and we will never lose money. I think it is improving. One of the things you must also realize is that this is a glut year for milk. Not only us, everybody is having huge stock of SMP and fat, which is losing value. But it is a few months away that all this will turn, because we have seen that it is a cyclical and seasonal business. And we believe that the future of this business lies in how much milk we convert into value-added products, because liquid milk will always have very low margin, high volume, but it is only in the value-added products that we will make good money. We have recently launched UHT lassi, UHT buttermilk. We have launched flavored yogurts, flavored milk, and we have also launched milkshakes. So I think our journey towards value addition and branding is going on, and we believe as the salience of value-added products in our total portfolio grow, the profitability of business will keep on improving.
So the value-added product segment contributed nearly 24% to the dairy business in FY18. So going forward, how much will this value-added product segment contribute to the dairy segment?
So we are expecting this year that it should be above 30%.
And what is the kind of margin boost that we will see because of this increased contribution?
So margin boost overall, if you take value-added products, the gross margins are between 30 and 40%. The big problem this year has been the commodities like SMP and butter, which are trading below cost. So if you take value-added products individually, the profitability will be very good. But unfortunately, if you put liquid milk on all these bulk products together, profitability is likely to take a hit this year. And this is not for us, it will be for everybody. You must have read stories around the kind of stocks which cooperatives are holding. So this is a surplus year for milk, so it will not be an easy year for companies.
And how has been the poultry business, and what is your outlook from that segment?
Poultry business is continuing. I think there again the same story has to play out, that more the value addition, more the real good chicken and yummy sale, the better will be profitability. I think the brands are growing at a very steady pace, so we are very encouraged by what is happening in the poultry business.
Godrej Agrovet's revenue for the last 5 financial years grew at a compounded annual growth rate of around 12%. So going forward, do you expect this kind of growth rate to remain, or will this growth rate increase going forward?
No, this will be slightly higher this year because of several initiatives we have taken. The other thing is that you should also take the impact of GST last year, because in our agrochemical business, GST is not counted in turnover. And in dairy business as well as poultry business, on products where GST is applicable. So if that impact will not be there this year, so we expect upwards of 12% growth this year.
That will be all, Mr. Yadav. Thank you for speaking to Bloomberg Quint. Back to you, Agam.
All right, Swami, thanks a lot for bringing that interesting conversation with the management of Godrej Agrovet, a company which listed last year. But let's quickly cut across to the management of Tata Steel as well as ThyssenKrupp as they speak about the new JV which they have formed. The press conference is taking place in Brussels right now.
To celebrate this historic occasion here in historic Brussels. Brussels is the capital of Europe, a place for a lot of summits and a place where great things are achieved together. And this fits very well to the idea of our joint venture. It's about Europe, about achieving something together, and it's a historic moment for both companies. With that, Pradipta, you should assist me now. Who is on stage?
Thank you very much, Alex, and welcome once again, ladies and gentlemen. It's a pleasure and a privilege to be here. We are very happy to have the key gentlemen who've been a key part of this entire process here on stage with us. And to introduce them, Mr. Rajan Chandrasekaran, the chairman of Tata Sons and Tata Steel Limited, better known as Chandra. Mr. T.V. Narendran, Global CEO and Managing Director of Tata Steel Limited, better known as Narain. And then, of course, we have Mr. Heinrich Heisinger, the CEO of ThyssenKrupp, and Guido Kirchhoff, the CFO of ThyssenKrupp. And after this introduction, we will be playing a short film. Post that, Chandra and Mr. Heisinger will make their introductory remarks. After that, you will all have an opportunity to ask questions. And to close the deal, we have a very special photo op of the signing moment. And once the press conference ends, there'll be a time to do some quick one-on-ones. And with that, I hand over back to Alex.
Okay, before we start, some technicalities and some information you need to know. First, we would like to start with safety. And in case of a fire alarm, please leave the building by the designated exit routes. The meeting point is outside at the playground right next to the library. Sometimes you might hear a bell ringing. This is not the fire alarm. This is from the school next to the library, so just to inform you. You will find all the information you need in the press pack, the press release, all the bios of the gentlemen on stage, and of course fact sheets and so on. The event will be broadcasted via web stream, so we have a lot of journalists watching us from all around the world, and a warm welcome to you too. This means for all of us and for all of you participating that you agree that you may be visible on videos or pictures. An important remark. For the Q&A, you have the opportunity to ask questions in 3 ways. For the journalists here in the room, please use the mics in front of you, press the button, must be easy. For those who are on the web stream, you can ask your questions directly in the webcast. It is on the bottom left on your screen. One remark, please be so kind. This press conference will be conducted in English, so ask your questions in English. Yeah? There will be a translation afterwards in several other languages, but the question should be asked in English, so it's easier for us to handle. Or you can ask your questions via using WhatsApp. If you registered for this, you can receive, and you have received all information in the invitation. With that, now I would like to hand over to the chairman and the CEO, but before I do so, we will show you a short film.
Two companies, each with a rich heritage. Both pioneers of the industry, with strong values and a firm belief that the purpose of work is the common good, and that leading a company also means leading people to a better future. Partners, even friends for decades, with a shared commitment to the community and to developing their businesses to meet the challenges of tomorrow. Tata and ThyssenKrupp have a tradition of driving change in the industry and are now coming together with a shared vision, building a new steel champion for Europe. As a technology and innovation leader, we will give an answer to the challenges of the European steel industry. Because we strongly believe that 1 + 1 equals more than 2. By combining our strengths, we will create sustainable value. We will be more competitive, more innovative, and deliver more value to our customers by realizing strong synergies that benefit all stakeholders. For our customers, for our shareholders, for our employees.
Good morning and a warm welcome to all of you here in Brussels at this historic occasion and location. On Saturday, we signed a definitive agreement to bring our European steel operations together between our two historic companies. Our two companies emanate from the heartlands of the European steel production with significant operations in 3 European countries. And we are very glad to assemble here in Brussels today because Brussels is the capital of the European Union, and we wanted to express our strong commitment to the idea of the European Union. Thank you.
I think it's important to once again acknowledge that the steel industry was an important contributor to the foundation of the European Union, and that the steel industry was actually promoting really common welfare. And the industry is known that we are able to build business jointly together with our employees. And the joint venture want to continue this tradition as a strong number 2 in Europe. And the new company will really serve diverse customers in important key industries in Europe. We strongly believe this is an ideal combination for our European steel businesses because there is an industrial logic behind it. We will give a perfect answer to the challenges the industry has right now by forming a new steel champion here in Europe.
Over the last 2 years, and more so in the last year, the discussions have been pretty intense. But I must say, I'm glad that we took the time to find the right solution and answers to all the different questions. When you form an entity like this, it's important to have the right diligence than speed, because resilience is very, very important. And this period has helped us to engage with all the stakeholders, the employees, the unions, and all stakeholders to get everybody on board. So we're very glad we are here today.
For both of us, for both companies, the creation of ThyssenKrupp Tata Steel as a highly competitive steel manufacturer is based on a strong industrial logic, on strategic rationale. We have no doubt in the material as such. On the contrary, steel is a fascinating material, and if you look in your daily life, you will use it all day long. It's also one of the most environmental friendly and sustainable material because you can recycle it without any loss of the quality of the material. However, supply and demand in Europe do not match. We have significant overcapacities worldwide, but also here in Europe. And this has put tremendous pressure on our industry and really forced companies to fight for utilization in order to really run the company profitable. So competitiveness is what we want to achieve, and competitiveness is really the key issue to move successfully forward. Global excess capacity had also caused tremendous additional import into Europe. Imports into Europe are on an all-time high level, which have additionally increased the price pressure on that material. And just recently, the US import tariffs are threatening jobs also here in our industry in Europe. Therefore, we highly appreciate that there is a joint action of European and international leaders to address these challenges going forward. But we cannot only rest and give the task to solve the issues to political leaders. We as business leaders have to act on our own. And this is why we really have formed a joint venture. It's really a market-driven approach to solve that issue, to really face the challenges of the European industry and secure jobs and secure the value chains for our customers.
Okay, that's the management of Tata Steel as well as ThyssenKrupp talking about their new 50-50 JV which they formed for their European operations. We'll keep cutting back in case some new details regarding the JV emerges from that press conference. But moving on, a month after the idea was floated at a meeting with the finance minister, bank officials have now submitted a proposal to set up an asset management company. Vishwanath Nair joins us with more details on that development. Vishi, over to you.
So, Navneet, what we understand from our banking sources is that there's going to be this asset management company structure that is being proposed that will likely take over the NPAs from bank books. Now, how exactly will this come into existence is by equity infusion from banks, from foreign investments, and also from infrastructure investment funds. So, all of these entities will come together. They'll contribute some equity. Then this AMC will go ahead and try and identify specific stress assets that could be taken over and turned around. It will determine a value for these assets and will pay 15% of this value upfront to the bankers. Once they have paid this 15% amount to the bankers, then the asset will be open for bidding from outside of bidders, anybody who might be interested, anybody who's not part of this infrastructure. And once these foreign investors, once these other stressed asset investors see good value in these assets, then they can come and better the offer or offer more money than the AMC is offering these bankers, and then take over the assets themselves. Let's say there is no outside investors who come up for these assets, then the AMC will continue to take over the asset. They will pay off the bankers the remaining amount of money, that's the remaining 85% value of the value of the NPA, and then they will employ some industry specialists who will help manage the asset and also turn around the asset. Once this turnaround is completed, then these assets could be sold to potential bidders, to strategic investors who might be interested. Now remember that these similar structures have been proposed in the past by bankers, but the RBI and or the government, either one party has largely rejected this idea. But right now, this idea was floated by a committee that was formed under the leadership of Punjab National Bank Chairman Sunil Mehta, and this committee has proposed this idea to the government, and the government is likely to make an announcement shortly. That's what we understand from our sources now.
Okay, Vishwanath, thank you so much for joining us and getting us those details. We'll continue to track more details with respect to that development. But moving in, let's get in technical experts for the day. We have Hemen Kapadia of KRChoksey, as well as Sumeet Bagadia, who's joining us this afternoon to give us an idea about what the markets look like. Hemen, I'm going to start off with you. Good afternoon. How are you tracking movements on the indices? We have seen a little bit of recovery from intraday lows today. That said, in general, over the span of the next 3 to 4 days, how are you viewing trade on the benchmark indices right now?
A very good afternoon to you, Agam. We've had a very tepid rollover. One gets the feeling that we'll see some open interest built up that would sort of, have a more clear view on which side we are heading. We were in a 14 trading range, Agam, between 10.7, 10.9. We had significant put writing. Everything devolved. That went down. We didn't break 10.550. We closed. We came back and closed at 10.7 on Friday afternoon at the close. So status quo. Frankly speaking, we are still slightly directionless as far as the Nifty is concerned. We remain in this range. There is a negative bias. Mid cap, small caps are weak. and the indicators are crossover sells. But I think we still remain in the range, so I'm not sure if I have a clear view, because if we close about 10,850, 900, we're looking at 11,1. Levels on the downside 10,700, 10,550 and 10,490. So we remain in the range, and if we go back to the Bank Nifty, the range is between 26,126, 26,841. We briefly broke 26,126 today, but we're still back to square one. So I don't think there's a clear bias, but the longer it takes over here, I think that much more heavy we are going to get an unsustainable.
So you're playing for a range via options on Nifty? Yes,
Navneet, because I think a trending trade doesn't seem to be working. So frankly speaking, Navneet, on little bit on bounces, sell the Nifty 10,900 call option at around 43, sell the Nifty 10,400 put option at around 75. So I have a feeling neither looks like being overcome. Yes, but the caveat is, if somehow we take out 10,900, I think one should do doubling, because then we'll go to 11,1 in a jiffy. Right now that's remote, but can't be ruled out.
Okay, that's the option strategy coming up on Nifty from Hemen. But Sumeet, I can see that you're looking to go long on both Nifty as well as Bank Nifty, as the markets, they have recovered from the day's low.
Hi, good afternoon. Yes, you are absolutely right. See, what we can sense looking at the charts, is that Nifty has supported around 10,600 and 10,550 levels. I think till the time these levels are not taken away convincingly, one should hold on the long positions, and if anyone wants to initiate a position at the current market price, then that should be on buy side. If there is a dip of around 30 to 40 points from present levels, one can initiate long positions with the stop loss to be placed at 10,550 levels on lower side, for the upside target of 10,750 levels. 10,700 can act as a small resistance on higher side. Once the levels are taken away, we can see move till 750 levels. I think for next couple of days, it's better to be on buy side in Nifty. At the same time, Bank Nifty also looks good to me. Immediately, the range for Bank Nifty is placed between 26,000, 26,100 levels to 26,500 levels on higher side. So if there is a dip of around 100 to 150 points from present levels, then that should be used as a buying opportunity. Downside, till the time 26,000 levels are not taken away, it's better to hold on the existing long positions for the upside target of 26,500, 26,600 levels.
Okay, hold that thought. Let's also get in a fundamental voice right now. We have Sanjiv Bhasin, Executive Vice President for Markets at IIFL, joining us. Sanjiv, thank you so much for joining us this afternoon and also being patient with us. Sanjiv, I'm going to get down to the point right now. Tata Steel, what have you made of the latest cues? I'm sure to a certain extent you must have also heard about ThyssenKrupp and the management and what the plans that they have in today's press conference. What are you making of this, and why is it that you like Tata Steel?
Yeah, so firstly, this whole rally which started from Trump and President Trump and the protectionism has all been about metals, and we are extremely bullish because global growth is back, whether it's Europe, it's it's the US or it's Asia ex Japan. All are showing extreme traction. So steel is in a very bullish mode and is, it's both ferrous and non-ferrous. Now steel capacity is not expanding. On the other hand, the ThyssenKrupp alignment or joint venture is an extremely bullish part because it gives Europe as in for Tata Steel to be a very big area of operation. We know the Chorus tie-up was not in a very, very good, it never stood in the real test of time, but this tie-up should be extremely positive. And we think that going ahead, Tata Steel is today the lowest cost producer, not in India, but in the world. And it will tie up with one of the largest players in Europe. So extremely bullish. Short term, I would say 625, 630 on Tata Steel. But if you have a longer term window, I don't rule out by March 2019, 750 on Tata Steel after this recent tie-up, and given that we are bullish on steel as a whole.
Okay, that's a bullish call coming in on the steel sector, but let's quickly get in some individual stock strategies from our technical experts. Hemen, what are you betting on today?
A couple of stocks, buy calls. Firstly, Ramco Cement, Navneet, oversold. The entire cement pack looks like bouncing. We've been hanging around here for a couple of weeks. Should bounce back at around 695, stop loss 680, target 725. Secondly, buy call on Vedanta, but frankly speaking, Navneet, Vedanta's almost hit the target. 244 was the target, and we've come to 243.80 in probably an hour and a half or so. But so I would like to tweak the figure a bit. Buy at around 238, stop loss 232, target 250.
Okay, 250 you're suggesting a target on Vedanta. All right, Sumeet, what about you?
Well, I have two stock ideas. One is on buy side and the other one is on sell side. The buy side idea is Asian Paints. Asian Paint is looking good to me. I think one can initiate long positions at the current market price. If there is a dip of around 10 to 15 points from present levels, then that should be used as a buying opportunity, with a stop loss to be placed at 1250 levels on lower side, and on higher side one can expect targets of around 1320, 1330 in next couple of days. The second pick for the day is on sell side, and that is on India Bull Housing Finance. India Bull Housing Finance is looking weak on charts. There is a possibility that from here on we can see a correction in which we can see levels of around 1080, 1070. So for a trading perspective, one can initiate sell positions at the current market price with a stop loss to be placed at 1150 levels on higher side for the downside target of 1080, 1070 in next couple of days.
Okay, well, shifting back focus to the mineral space, we have Coal India, which has extracted nearly 40 million tons of coal last month, and this is a 13% rise on a year-on-year basis. And we do have the street, giving us some comments with respect to this. Well, extraction from Coal India. We have Nikki Mirchandani to give us an idea and a better picture on the same. Nikki, over to you.
Thanks. Well, we're going to start off with the production numbers, which you just said were 13% higher on year-on-year basis for the month of June at a number of around 44.88 million ton. Now, this is for the second consecutive month. However, the production on month has been declining. But then on year-on-year basis, we're looking at an improved situation in domestic demand, because of which the production has been higher. This is what Morgan Stanley has stated. They also expect production to remain at healthy rate in the coming months. Also, it remains to be noted that the production has missed the targets for the third consecutive month. It was back in March only that we saw the actual production figure surpassing the one of targeted. All the subsidiaries except NCL have reported a shortfall in their production numbers. Offtake monthly growth also has remained healthy for the company. We're looking at a 9% uptake at a number of around 45.6 million ton. On month-on-month basis, we're looking at a 4% increase. However, you would see some kind of moderation that has took place in the offtake numbers as compared to the previous 2 months. Nevertheless, on year-on-year basis, this is mainly on account of the increased supply that the company has delivered to power sector, and the growth is mainly to normalize inventory levels and rising power generation. This is what Morgan Stanley stated in its report. Also, if you look at the target in so far in calendar year 2018, we have not seen offtake meeting the actual number meeting the target figures. In June, it stood at 55.28 million ton, which is a 10% miss as compared to one that was targeted. Production and offtake picture so far in FY19 has been moderate enough. Production, however, has missed the target by 9%, registered a moderate growth of around 15% in FY19. And if you look at the offtake figure, that has also missed the target by 10%, but cumulatively on year-on-year basis, it has seen a rise of as much as 10% at a number of around 153.4 million ton.
Okay, output rising but still below the target. Thanks, Nikki, for joining us and taking us through all those details. But moving on, rising macro worries are reflecting in India's debt market. The country's benchmark bond yields have been rising for 4 consecutive quarters now, and that's our chart of the day. Saloni Dhanuka is standing by with a closer look on that. Saloni.
So Navneet, India's 10-year benchmark bond yields have risen for the 4th consecutive session now. As you can see here, this is for the 4 quarters that you have seen here. The bonds yields have risen for the 4th consecutive sessions this year around, and this was last seen in December 2012, where the yields have risen consecutively for 5 straight sessions. Now remember, earlier this June, yields have touched the crucial 8% mark, its highest in over 3 years, after Reserve Bank of India increased their repo rate by 25 basis points to 6.25%. Also, Lakshmi Iyer, the Chief Investment Officer of Fixed income at Kotak Asset Management believes that foreign investors and public sector banks are not really present in the foreign debt markets, and foreign investors have sold close to 39,000 crore worth of debt so far this year, and she believes that yields may come down a bit in the near term. However, they are not sustainable at the lower levels, and she believes that yields will remain elevated going ahead, say in 3 to 6 months, given the inflationary pressure, and also market is factoring a rate hike, a 25 basis point rate hike by RBI in its August meeting, Navneet.
All right, Saloni, thank you so much for joining us and giving us that chart of the day. But I'm going to shift back focus to the metal sector. And, you know, Sanjiv Bhasin has spoken to us about Tata Steel. But, Sanjiv, I believe that you are also positive on SAIL. Is this largely on account of reasons similar to those for which you are positive on Tata Steel as well? Why are you constructive on SAIL?
Yeah, so SAIL in the last 3 quarters has reduced its cost very strongly, and you know, EBITDA per ton has gone up, and we think this cost cutting exercise will see huge upside potential. You must realize both SAIL and JSW Steel are very good integrated plays, and most of the domestic volume plus SAIL will be a beneficiary of some of the exports given the weakness of the rupee. So I think some of parts, Tata Steel, SAIL and JSW, these 3 stand out as our top picks in the steel space, and we are very bullish on Hindalco and would use any decline to buy, given that Novelis has turned around and is seeing a lot of traction both in Canada and in the US.
Okay, Sanjiv, since you've given us your top picks, I just want you to help a couple of our viewers who are watching our show right now. One of our viewers, Gaurav Garudia, he wants a view on Kaveri Seed. He's actually bought the stock around the levels of 550, and he's asking, should he be holding back the stock or should he be selling at current levels? It's currently at about 544.
Is that for me?
Yes, Sanjiv, that's for you.
No, I don't track Kaveri Seeds, but if you want to be in that space, then we like in the agrochemical space Rallies. Rallies has corrected quite a bit. That and UPL have been underperformers, but we think given the onset of monsoon and the pickup in rural incomes, we think agrochemicals will be a very positive space. So I would say that if you want to buy Rallies India and UPL, both have an upside potential of 25%, and they are very stable and good names with pedigree managements.
Sanjiv, before we let you go, just a final question. We are getting a lot of queries on Motherson Sumi as well. Over the past few days, we've seen some substantial correction coming through, even though there's a little bit of recovery over the past couple of days. Do you track this counter, Sanjiv? If yes, what would be your call? If no, what else would you say when it comes to the auto ancillary sector?
Yeah, so I track this. This is a very opportune time. It has fallen more in sync with some of the weaknesses which came in from Germany on the back of weak guidance from BMW and Daimler Benz. But Motherson Sumi has now shifted its business of over dependence on the German market, and has their clientage has gone up extremely well in other parts of Europe. So I think extremely good opportunity time to buy Motherson Sumi at these 280 levels. It's a pedigree stock, and we think OEMs will be in very good shape after the monsoon season. So I would suggest 3 stocks. It's Motherson Sumi, Suprajit Engineering, and Exide. All 3 will in this auto ancillary verticals can do extremely well. So if you buy a basket of 3 or you concentrate on Motherson at these prices, I would easily expect a 30% upside in the next 1 year.
Okay, 30% upside can be expected on Motherson Sumi. Sanjiv, we'll leave it at that note. Thanks a lot for joining us today and taking us through your views on individual stocks. But I think Infosys is at all-time high once again, and it's inched higher in trade right now. It's almost at day's high currently, but we'll get some views going on the Idbi Bank on the other side. It's time for us to slip into a short break here and Countdown. But don't go anywhere. We'll get you some Fab 4 stocks also of the day. And at 3:15 p.m., we'll also tell you what the dealing rooms are recommending and some closing strategies from our technical experts. Stay tuned.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Of GST was a bold one. Has it delivered? Join BQ as we take a deep dive into the year gone by, from our vantage point to yours. Watch the fine print GST special all week only on Bloomberg Quint.
Welcome back. You're watching Countdown on Bloomberg Quint Live. About 26 minutes to go before our markets shut this Monday in terms of trade. And the benchmark indices are trading off day's lows, however, still with cuts of as much as 0.5%, especially for the Nifty 50 and the Bank Nifty. Both of them edging lower at this point in time, with the Nifty, as a matter of fact, at around 10,655. But what are the European markets doing right now? Well, a substantial more weakness coming through, especially for the British and the French markets. Both of these are declining by as much as nearly 1%, and 0.3% cut for the German DAX. So on the whole, not looking very good when it comes to the European markets. But let's shift focus back to, okay, so you also have the Dow Futures then, and that's also looking at a cut of around 0.5% at around 24,130 odd levels there. It said, well, let's shift focus to some of the stocks which are doing well in today's day of trade, despite the fact that the indices are, well, declining today. We have Shraddha Babla to give us a list of the fabulous 4 stocks of the day. Shraddha, good afternoon, over to you.
Good afternoon, Alex. So first, Agam, first on the list is RITES, which has just made its stock market debut today. While the debut was muted, a listing of just about 2% higher. The stock is trading about 15% higher right now. In fact, the 460 crore issue was subscribed as much as 67 times. Next on the list is Cheviot Company, the jute maker. It has snapped its 4-day losing streak and is up about 7% after the company said that it will consider a bonus issue on 10th of July. You also have Idbi Bank, which has gained as much as 5.5% on an intraday basis. This is after the insurance regulator regulator approved LIC's investment plan. LIC can now invest or increase its stake up to 51% in Idbi Bank. So that's another one. And finally, we have Mithila Financial Services, which has risen on high volumes. The stock is also buzzing on the back of heavy volumes, which were at about 3.8 times its previous 20-day average. The stock has gained up to 10% just in the last 2 sessions.
Thanks a lot, Shraddha, for bringing those Fab 4 stocks of the day. And before we bring in our next fundamental guest on the show, Hemen, very quickly, there's a query from one of our viewer named Ravi Shankar. He wants a chart check on Reliance Industries future for July series. Do you think is any position that can be taken on Reliance at current levels?
Frankly speaking, Navneet, it's retracing the fall. So I don't have a very clear view. But even then, I think today's low has to be kept as a stop loss. These are cash market levels of 957. A bounce is in the offing, so a stop loss at 957, target of 975 and 981. The bounce could go on to 991 also, but it's a recovery and not a rally. So a high risk trade, but today's low is a stop loss.
Okay, well, let's get in another fundamental voice right now. We have independent market expert Dharmesh Kant also joining us this afternoon. Dharmesh, good afternoon. Thank you for taking the time out. Let me just ask you what you are advising your clients at this point in time, because as it appears, there is much more weakness in the broader market, specifically the mid-cap and small-cap stocks. Is it a time to wait and breathe a little, perhaps think? Or do you think that now you're starting to see decent valuations to jump into the relatively good quality, better quality stocks in the broader markets?
Yeah, good afternoon. See, the valuations are still a bit, stretched rather than being decent. I think only if, 20% plus kind of earnings growth rolls out in Q1 FY19, then only these valuations will be justified for mid-cap and small-cap segment. Largely, if you look at the stocks which have done well, I mean the companies which reported 15 to 17% kind of a growth in Q4 FY18, those are the companies which are nearing their fair valuation. So it's still a time to sit on the fence and watch how the global cues pan out. And very importantly, India has never been delinked from the global macros if it comes to on the negative side of the Indian market, like crude oil prices flaring up with currency getting depreciated. It has never helped our country. You look at the history, any period when these two were going up, I mean currency depreciating and crude prices going up, the domestic companies suffered, because then the inflation picks up and then you have the interest rate cycle going up, and mid-cap and small-cap are the companies which fare the worst in the high interest rate cycle because their cost goes up substantially and they are the ones who borrow at a high cost. So I think one has to be very careful, and the other disturbing fact of this market is the narrowness of the market. Every day, even among the large cap, the market is getting narrower. So cherry picking should wait a little. Sectorally, I think the global cyclicals which were there will perform well, and the consumption theme in the FMCG segment, at the same time auto ancillary, metals, cement, and some of the financials will be the areas where one should look at. But as of now, one has to really wait. And if you remember my call on crude when it was trading at 62, 63, after the correction, after it making a peak, I repeatedly said it's going to go up and see where it is. I do feel that it will hit around 80, 85 before it peaks out.
Okay, well, there you have it. Well, some concerns raised by Dharmesh out there, but there are a few stocks which are still continuing to trend higher, and I want to pull up Infosys right now because that's actually trading at day's highs, if I'm not mistaken. It's well above the mark of 1334, and it continues to advance. Can we take a technical check on this one? Sumeet, if I can come to you on Infosys, I know there's a lot of strength in the stock. At one point in time, would you start getting concerned, if at all you would get concerned? What levels are you keeping an eye on when it comes to Infosys at this point in time?
Yes, you are absolutely right. Infosys is looking very strong on charts. At present, it has entered a fresh territory where there is no resistance. I think from here on there is a possibility that we might see an upside move till 1380 or 1400 levels. I think I would like to use trailing stop losses because once the stock enters new territory, there is a possibility that we might see a one-way move, and this move can continue till 1500 levels also. At present, the best support for long positions which comes at around is 1280 levels. So till the time this 1280 levels is not taken away, 1280, 1280, till the time this level is not taken away, it's better to be on long side. And from present levels, if there is a correction of around 10 to 15 points, then that should be used as a buying opportunity for the upside target of 1380 and 1400 levels. As soon as the stock touches the levels of 1380, we will again revise the trailing stop losses, and we will hold on and carry the long positions till the time we don't see any signs or signals of profit booking or correction from high levels.
Viewers must remember that Infosys earnings will be out next Friday, the 13th. And TCS will announce its earnings on the 10th of July. That's this coming Tuesday. Not tomorrow, but the Tuesday after. And keeping in mind, Sumeet, if I can also take a chart check on TCS and how you are seeing moves on this counter. Are you also seeing strength, and as much strength as Infosys on Tata Consultancy Services at this point in time?
Yes, absolutely right. See, as far as view on TCS is concerned, the stock is looking very strong. It seems that from here on we can see a move around 80 to 100 points. On higher side, immediately the stock can face small resistance at around 1880 levels. As soon as these levels are taken away, we can see move till 1950, 1980 levels. I think those who have taken long positions in TCS, they can hold on the existing long positions. And for next couple of weeks, if anyone wants to initiate a fresh long positions, then they can go ahead and initiate at the current market price. If by chance there is a dip of around 20 to 30 points from present levels, then that should be used as a buying opportunity. Downside, it has major support at around 1800 levels. That means till the time these levels are not taken away, it's better to be on buy side. And on higher side, once if 1880 is taken away, we can see move till 1950 levels. So for next couple of weeks, it's better to be on buy side in TCS.
Okay, that's the view coming in on TCS as well as Infosys. That's the technical view. Dharmesh, there are a lot of stocks that are moving around in the broader markets. Is there any sort of value hunting that you're doing currently?
See, if one is to, get a staggered approach for, just start deploying from current levels, then maybe, a Bharat Forge in the auto ancillary space looks pretty attractive to me. I think with the operational efficiency kicking in and the US market picking up, especially the Class 8 trucks, the forging business will do well, and currency depreciation again comes in handy for a export player like Bharat Forge. Auto anchor in India has been doing well because post the monsoons, auto segment is going to pick up, and a particular two-wheeler and four-wheeler segment in the passenger vehicle, these are the areas which will pick up. So the company is, sweetly, poised to reap the benefits. At the same time, a significant price correction has happened. My own sense is that 46, 47 kind of an EPS, it is likely to report by FY20. And then if you discount that at current market price, trading at 12, 13 kind of a PE multiple. So plenty of scope out there, even at 20x PE multiple, 930, 940 should be the upside target. So a good fundamental buy. But again, I would advise clients, all your viewers and listeners, to have a caution and get a staggered approach like 1/3 now. Apart from it, BEL, Bharat Electronics looks pretty attractive to me. The company is good. Last quarter was not so great because of the order booking kind of an accounting treatment which was there. From here on, 20% kind of an earnings trajectory will be there. So book to bill ratio, if you see, it's almost 3x, and there is no dearth of order out there. Operational efficiency, return ratios, everything is fine. So that's another stock which one can look at. Metals sale looks very attractive in the steel space. So these are the three quality stocks which one can accumulate, start accumulating from current levels.
Right, Dharmesh, we're going to start seeing results come through from next week onwards. I want to ask you about the consumption space specifically. Are there names in the consumption space that you are looking forward to with respect to earnings, and what are you expecting in general when it comes to earnings with in the consumption area?
See, broadly, if you look at the consumption space, it has been a single-digit growth for almost all the mid-cap and large-cap names. A higher single-digit at the best. None of the companies were able to report in a double-digit segment, primarily because the input prices were up, and at the same time, the growth was 6-7%. So, blended realization they were unable to pass on. Going forward, if the monsoon pans out, good. So maybe third and fourth quarter would be the quarters when there would be some significant growth going into the festive season, and the earnings of the people are good, but at the same time pricing, they would be able to pass on the prices. But again, input prices are high, so there would be a hit on the margin front. Keeping that in mind, if you look at the valuations, everything is, on the sky high kind of a valuation, be it HUL or Colgate, Bata, Dabur, Nestle. All these stocks are trading at, on the higher end of the valuation trajectory. And just because the market has been so, negative on the entire mid-cap, small-cap space, so the money has to be parked, and because of the liquidity crunch, the stock prices are flared up. So margin of safety is not there if you want to be into consumption space. At the same time, if the earnings are below par or at par from the other sectors, you may still see a 10-15% kind of a flare up in this stock. So in absolute terms, how much return will be made, I am still skeptical. I don't think that much return can be made. At best, you can make 10% from here on for the rest of FY19. So just because you want to park your money into equity, I mean Bata or HUL looks attractive, Dabur also is there. Apart from that, not any attractive name out there. Even Jyoti Labs, I don't think much is there. Even their input prices will be much higher.
Okay, so those are a couple of stocks as being recommended by Dharmesh. A lot of stocks actually have corrected. Den Networks is down 9% in trade. You've got Kohinoor, that's down 8%. And also Adani Enterprises, let's not forget, there's a lot of open interest build up with this one as it touches its fresh 52-week low. So a lot of shorting has been taking place for Adani Enterprises. Well, it's 3:15 that time of the show when we tell you what the dealing rooms are recommending in trade. And to take us through the same, Darshan Mehta joins us. Hi, Darshan.
Hi Navneet. A lot of stocks have been spoken about. The first stock that dealers are talking about is Crompton Greaves, and it's up almost 5%. It's moved up significantly. The likely sale of the Hungary unit is to be completed. The management in the conference call post the earnings that they had indicated that they expect the deal to be completed by 30th June. That hasn't happened. It's almost second now. So over the next few days, the anticipation is that the conclusion of the Hungary unit will be complete. So Crompton Greaves is the first stock that dealers are talking about. The other stock is pretty much the metal pack, which is doing well. Lots of positive news coming out in the metal sector. First of all, the Tata Steel ThyssenKrupp deal got completed. Vedanta indicating that they want to delist their PLC by giving a premium of almost 28%. So they expect traction to happen. So overall, there seem to be a little bit of bounce back that's happening as far as some of the metal counters are concerned. So metals as a pack is something that you need to watch out for. And Infosys is doing extremely well. It's trading at record highs. Dealers believe that the momentum will continue. The gap between TCS and Infosys, they believe, will have to actually close down significantly. So they believe that Infosys is the one that will rally significantly over TCS at this point of time.
Okay, Darshan, thank you so much for joining us and giving us what the dealers have to say. Of course, Infi will be in focus, as I've already mentioned, on account of the earnings. But Darshan was also mentioning some of the metal stocks out there, and one of them was Hindalco. Can we pull up the chart of Hindalco and see what it's doing at this point in time? We're seeing substantial weakness. One of the key reasons why there has been a dip in the Nifty Metals Index as well. It's down by as much as 3.3%, off days lows, but there's weakness all the same. Hemen, can I come to you on Hindalco? There's confusing trends here. How are you reading trade on Hindalco at this point?
I think the entire metals pack, 18-month decline, 2-year up move. Most of the metal pack has stagnated on the monthly chart. Positive that you're seeing on Vedanta and something else are only on the short to medium term, and their bounces. Coming back to Hindalco, I don't see it going about 232. There's very strong support at around 216. It could consolidate over here. It has been for the last 8 trading sessions between 216 and 232. A close below 216, it's going to be in weakness. I find it difficult for it to sustain about 230. So it's in a bounce. Maybe there could be some time or maybe a pleasant surprise, but it's clearly corrective. It's not a rally or a bull market at all.
Okay, that's the view on Hindalco. I think Jindal Steel and Power has had a sharp correction in today's session among the metal counters. But Dharmesh, I'm going to come back to you and take a couple of the viewer queries. One of our viewer wanted to know which among these stocks is a better bet, namely Capital First, MK Global, AB Capital and Edelweiss, if you like any of these stocks, which you think can be bought at these levels?
I think all should be avoided because as far as Capital First is concerned, post their merger with IDFC, when it will happen, it will take 2-3 years to pan out the entire business in a merged entity. So it will take time. So the story of Capital First, which was going earlier as an NBFC, now stands on a stoppage, and I think it will take time for this entire story to play out again. So one should avoid that. MK Global, Edelweiss, I would not be commenting because they belong to the broking fraternity. I think in NBFC space, if one wants to actually look at a serious bargaining opportunities, so housing finance companies still look pretty attractive to me, and India's housing finance after the recent correction offers a very good opportunity. So one can look at that, and at the same time look at private banking space like RBL Bank or Yes Bank. So these are the two banks which has been doing fairly well with the asset quality well managed. RBI has been very harsh and hawkish in assessment, and it's rightly so. So they have been pulling out all the loopholes and plugging the gaps which was there in the systems to report the NPAs. In spite of all this constructive scrutiny by RBI, these two banks have been able to have their asset quality fine. So that itself is a certificate that the things are going on fine. So I think RBL, Yes Bank, and these are the counters one should look at. In housing finance, India's housing finance looks attractive. Pure NBFC space in a rising interest rate scenario, one should wait because the valuations are still not cheap for other NBFC players like a Bajaj Finance. Though the stock price has gone up significantly higher for Bajaj Finance, but I think it's now the peak for it.
Okay. Let's just get you some closing strategies from our technical experts. Sumeet, I'm going to come to you first. Any BTST or STBT that you can recommend?
Kansai Nerolac is looking good to me. I think one can initiate long positions in Kansai Nerolac at current market price, with a small stop loss to be placed at 450 levels on lower side, and on higher side we can see levels of around 475, 480 in next couple of days. So I think one can initiate long positions in Kansai Nerolac at the current market price.
Since Sumeet, you've spoken about Kansai Nerolac, I also want to pull up Asian Paints, and if you could address Asian Paints, because Asian Paints is actually now the top Nifty gainer in today's day of trade. It's up and it's trading at day's highs. Sumeet, do you see as much strength in Asian Paints as well?
Yes, absolutely. See, as far as view on Asian Paint is concerned, starting of the show, we had given a buy call on Asian Paints, and we are expecting Asian Paints to move up and touch levels of around 1330, 1340 levels. I think till that time 1250 levels are not taken away, it's better to be on buy side. Those who have taken long positions in Asian Paint at current Asian Paint at lower levels, they can hold on the existing long positions. One can initiate fresh long positions at the current market price. Immediately 1300 will act as a psychological resistance for the stock. Once the levels are taken away, we will see move till 1330, 1340 levels in next couple of days. So I think one can initiate long positions in Asian Paints too.
Okay, Hemen, what about you? What's your closing strategy?
STBT on PVR, Navneet, we are at around 1360. So sell at around 1360, stop loss of 1368, target of 1342.
Okay, so those are some closing strategies coming by. Sell on PVR, which is at 1360 right now. Before we thank Dharmesh, I'm just going to take one more viewer query that has come by on Canfin Homes, since you did speak about this sector. Any thoughts on Canfin Homes?
See, the stock is good. The company has been doing fairly well, even at the asset quality is okay. When the type of exposure they have is mostly to the salaried class, but the stock prices has corrected significantly from the peak. So I would advise viewer, if he is holding at a higher level, he may buy some more and try to average out, because fundamentally things are fine for Canfin Homes. But one has to have patience for 1 year or more for a time period, because cost of funds is where this entire alignment is happening in the housing finance segment, which is going to go up, and then the valuation multiples have to be adjusted depending upon how the growth scenario picks up. My own sense is 12 to 15% is what a decent growth all these housing finance company would be clocking for the next couple of years. So a good company to be in, and don't get worried because of the stock price correction. Be invested, and if you can put in more money, you can do so. For next 2 to 3 years time frame, 40 to 50% kind of an upside would likely be there.
Okay, there you have it. That's your view on Can Fin Homes. Dharmesh, Kant, thank you so much for joining us and giving us your views on the markets right now.
Thank you.
With that, I want to pull up what's happening with Titan Company as well. And, you know, a lot of traders, I'm sure, will be, should I say, cautious with respect to Titan, considering its moves over the previous few days. That said, we have seen some recovery. And some recovery despite the fact that a marquee investor has booked out partially of his stake in Titan Company. It's currently at around, as you can see, well, around 894, if I can read correctly. It's up and about, and it's actually picked up in the last 1 hour or so of trade. Hemen, how are you reading cues on Titan Company at this point in time? Would you initiate longs?
I think depending on your time frame, we've had a sharp bounce from 830 to 910 in just a couple of trading sessions. So if you have a short-term view, I think no, I would wait for it to come to 865. So it doesn't quantify for a buy from a shorter-term point of view. Medium term, yes, we've come off from 1000 to 830. We are giving a retracement, a recovery of this fall, which is the recovery not yet over. So at around 865, 870 is the level I would probably go long.
Okay, that's the technical view coming in on Titan. Looks like the overhang which was there of RJ selling some stake, that's over. It's second straight day of good gains coming in for Titan Company. But just 2.5 minutes to go for markets to close. Let's head across to Agam Vakil to find out how exactly today's closing is panning out. Not good, Agam, but we're off day's low.
Yes, and Meet, I'm sure a lot of traders out there will be a tad disappointed considering the kind of strength that we saw last Friday, and that really hasn't come to be. In fact, some profit taking coming. And at one point in time, the Nifty was down by another 1%. That said, we have seen a little bit of a recovery in the last couple of hours of trade. And as you can see, both the Nifty and the Sensex are looking at cuts of around 0.5%. And this is not any different for the Nifty banking index either, down by as much as 0.5%. Let's take a look at the broader markets and how they are doing. Well, it's largely the same. Perhaps the cuts are just a notch deeper. So for the mid cap and the small cap indices, they're down by as much as 0.7%, and the BSE mid cap index was down by nearly 0.9%, nearly 1% out there. Well, this is something that we could expect considering we did see that weakness on the benchmark indices. And speaking of the contributors on the benchmarks, let's take a look at the key gainers, where we have Asian Paints, Infosys and Titan right at the top, advancing by nearly 2% and over 2% for Infosys and Asian Paints. And on the losing end, we do have weakness in Indian Oil Corp. HDFC Bank is the one factor that is bearing down on the indices, along with Hero Motor Corp. That's also down by another 2%, and ONGC, of course, continues to grind lower. Grasim is the other one, and of course, some weakness coming in Hindalco. Hindalco is down around 3.5%, and that's the reason why we have seen the weakness in the Nifty Metal Index as well. Bharti Airtel as well as NTPC also down to a certain extent in today's day of trade. So not too much to speak for when it comes to the benchmarks as of now, Navneet.
Right, Agam. Well, the day one to this new week has not started on a good note, definitely. But let's look at the broader markets, and I'm going to start off with a couple of losers. 8K Miles today was locked in lower circuit. That stock saw some bit of sharp correction coming by, down almost 20% in trade. Kohinoor Foods was also under pressure, so there was some bit of selling seen for that one, 7 to 8% lower for this one. Den Networks, that touched its 52-week low today, and you also had TV18 Broadcast, which is also there in the F&O basket, and that saw some bit of selling pressure. From the metals pack, you had Jindal Steel and Power, which corrected sharply today, and Adani Enterprises, though it bounced back a bit, but this too touched 52-week low in today's trade, and there was huge amount of open interest build-up for Adani Enterprises on the short side, finally closing with cuts of nearly 7.5%. On the gaining side, Balkrishna Industries since the morning session has been doing pretty well, so finally closing with gains of 3%. Some fresh longs were built up here as well. Arshia Limited, we spoke to the management of this company on Friday, and today look at the stock, it's up 17 to 18%. It was up on Friday as well, where the management indicated they're looking to cut down their the debt for FY19 by almost 500 to 600 crore. Lumax Auto Tech Company also did quite well. As you can see, the gains came in just last an hour of trade, 14% higher for this one, and matrimony.com was also bucking the trend, so 14% higher for that one. Just new listings I want to highlight. Rights was up today, so good listing going there for Rights, 14% higher, and the second one was Fine Organics. This one too listed with the premium, and the final closing is coming around the levels of 824 Agam.
Also, good listings coming through for, at least as far as the IPO is concerned, good debuts coming in for Fine Organics as well as Rights. But let's take a look at the intraday movement of the Nifty, and as you can see here, it's been largely weak for the index out there, and did start off, and at one point in time we did see the index down by as much as 1%, some recovery coming through, and we're seeing it end at about a 0.5% cut. Moving on with respect to Sensex too, it is not very different, considering a lot of the constituents are also there, and at the end we're looking at about a 0.5% cut for the Nifty Banking Index as well. A lot of weakness coming on account of HDFC Bank. And speaking of some of these constituents, let's take a look at the advance decline ratio. As you can see out here, the declines tipping the advances with the ratio of 2:1. So a lot of weakness in the broader markets, and that is something that continues to trouble the markets, Navneet.
That's right, almost 1:2 in favor of the declines. If you could just pull up the participation and see how the turnover stacked up in today's trade. So definitely the NSE F&O turnover picked up in trade, and the cash is just about the same. I guess on Friday it was 27,000. Today it's about 28,500. So participation has been just about okay in the last few trading sessions. On that note, let's bring in some closing thoughts going from our technical experts. Sumeet, I'm going to come to you first. We've closed above the mark of 10,650. What would your approach be? I remember you said you will be looking to buy Nifty and Bank Nifty. Would the approach be the same for tomorrow as well?
Yes, till the time the supports are not taken away, the approach would remain the same. Immediately 10,600 will act as a support, and overall for positional trades 10,550 is a very good support. So till the time these levels are not taken away, it's better to be on buy side only. On high side, immediately 10,700 will act as a hurdle. Once 10,700 is taken away convincingly with volumes, then we will see a move till 10,750, 10,800 levels. I think in the next couple of days we should see upside move till 10,750, 10,800 levels. On the other side, Bank Nifty also has supported around 26,000, 26,100 levels. I think till the time these levels are not taken away, it's better to hold on the existing long positions. And on high side, immediate resistance is placed at 26,400, 26,500 levels. Once these levels are taken away, our conviction will get strengthened for the upside target of 26,900, 27,000 levels. Immediately, one should hold on the existing long positions.
Okay, Hemen, 10,657, your closing thoughts?
I think I'll remain as non-committal as ever, Agam, because I'm still not quite sure where it's heading. It's a question of crying wolf. We've had multiple attempts at either side, and I thought 10.7 was decisively broken, and we went back and we slipped below that. So I still feel the market is deciding. But once again, the longer it takes to hang around over here, I think that much more difficult it's going to get for it to give that elusive breakout about 10,850, 10,900. So I'd be cautious. Stocks are doing what they are doing. I don't think I have a clear view on the Nifty or the Bank Nifty.
And that's been there for the last 2-3 months. You've been playing with the range, I guess.
Yes, absolutely. And more often than not, those slightly simple strangles have worked.
Yeah. Okay. On that note, let's thank both our technical experts, Sumeet and Hemen. Thanks a lot for joining us today and taking us through your technical views on the indices and also on individual stocks. With that, it's a wrap on this edition of Countdown. It's goodbye from Agam and my side. Thanks a lot for watching the show, but don't go anywhere. Agam will be back with Market Strap.